Hello and welcome everybody. Welcome to our second quarter 2023 live market discussion. I'm so excited to have such an esteemed group of experts on our panel today, and we are here to share with you our deep insights from all different aspects of real estate. So, very excited to share with you uh, the speakers. First off, we have Yuval Greenblatt. Yuval is our executive manager of sales here at Douglas Elliman. I've been working with Yuval for 18 years now, and amazing person. Very excited to hear what he has to say. We have Gabrielle Correa, who's also my co-host today on the Bacadari team. Hi, Gabrielle. How are you? We have Stephen Allen. Stephen Allen is one of the top attorneys in New York City residential real estate. He's kind of like the guy that makes all these deals happen on the legal side. So very excited to hear everything Stephen has to say. Hi, Stephen. How are you?
Good.
We have Hal Gavsey. Hal is our director of leasing, executive manager of leasing here at Douglas Elliman. He is our go-to for all things having to do with leasing. So very excited to have Hal on. And we have Valerie Fader, who is going to join us shortly. I think she's back on now. There she is. Hi, Val. How are you? So, Valerie is, of course, probably the most interesting person to hear from now in the financing world, because the elevated mortgage rates we've all been experiencing the last 12 months, she's the gatekeeper for the funds that flow into the New York real estate market. So excited to hear what she has to say. Valerie, can you hear us okay?
Yes, yeah? I finally can. Thank you so much.
All right. Let's get going. All right.
Technical issues. I'm always the one.
No, it's great. It's wonderful. All right. So let's start with Valerie. So Valerie, I just wanted to talk with you a little bit about the financing world. What are the biggest challenges involved with getting financing today?
So it's a great question. I think what I'm seeing lately is that a lot of the banks are operating from a position of fear. I'm seeing a big shift that occurred ever since Signature and First Republic went out of business. And a lot of loans that used to fly through the system are getting scrutinized now. So whether it's a matter of debt ratios, reserves, building profile, I feel like banks are really looking for loans that precisely fit inside their box.
Interesting. Very interesting. And so what you're saying is that they're basically scrutinizing the deals more. Like, can you give us like some examples of how things are different now, let's say, than last year?
Well, I'll say that they're not looking to make exceptions. So some of the issues that I'm having is, for example, I have clients that, will have sufficient reserves prior to closing, but it's not in the account yet. They don't want to entertain a loan without that in the account already. Stability of employment is a big theme that I'm seeing. A lot of people have some volatility with their commissions and their bonuses. And again, they won't look at compensating factors the way they used to. So the takeaway is not that the loans can't get done. It's that borrowers need to be prepared so they can navigate through these situations.
Amazing. And they have you to navigate them. I love the way you characterize that. That's great. So I guess that leads me to my next question. It's been on my mind. I lose sleep over this. What is the best advice you want to give someone looking to finance?
So I always say start the process early. I think most clients know you got to get your pre-approval lined up. But I think, in addition to that, you have to make sure that you're working with someone that has a lot of these backup resources, as well as someone that knows how to present your file in the best light. So I know that a lot of clients are aware that they should interest rate shop, but I think more importantly in this environment is to shop for someone that you feel is going to know how to navigate you through the process and be an advisor, an advisor. So again, the loans are getting done, but you just want to make sure you're working with someone that's going to know how to properly advise you. I would say right now, maybe 1 in 3 loans that I'm working on require some kind of finessing with underwriting where we need to turn a negative into a positive. So they get done, but you just have to know how to navigate.
Amazing. Thank you. It's so interesting because, a big part of the whole transaction, of course, relies on the financing, but the legal side of it is where, like the whole structure of the transaction needs to happen. So, Stephen, very excited to hear what you have to say about, like, what would you say is the best legal advice, that, you can give buyers and sellers transacting right now? What would you say?
Absolutely. Okay. So what we like to see on any transaction, any of us on this call or any of us logging in, is we like to see speed, but we also don't want to see quality get sacrificed for speed. So in many instances, what I tend to tell my clients, buyers or sellers, is I say, look, at the very beginning, even while we're crafting a deal sheet, even while we're crafting an offer, let's put it all out there. Let's be honest as possible. Let's get as much information out there as possible so that if this transaction goes forward and you have an accepted offer and that moves into the contract negotiation period, because everyone has been so forthright with each other, if something pops up during due diligence or something pops up during the contract negotiation part, the other side can feel like they were being misled or that the other side was not being completely honest with all of the different things that were associated with the deal. The most plain example of this I can give everyone is if you're representing a seller, what I always tell my broker friends and what I also tell other attorneys that I work with is try to get the most recent statement for the common charges, the most recent statement for the maintenance charges. All right. Sounds like a really silly example, but if you really just think of it this way, sometimes these guys have it on auto debit and they've had it on auto debit since they closed back during the Obama administration. Right. So they don't even know what their month. So if you get that current money in your hands, then the right amount can go on the deal sheet and therefore the right amount can go in the contract. Because the last thing that you want to do, hire during due diligence, say, wait a minute, the common charges are actually that plus X, or the maintenance are that plus X. And what have you now done? You've effectively now caused the other side to lose some trust and some faith in the process and trust and faith in the seller. And then you kind of get into an issue. And that issue can either bubble over before the contract, asking for a lower price, asking for a credit, or, and this is my experience, the buyer will hold on to that. And then when they get to the actual closing and when they get to the final, they have that kind of chip on their shoulder and they say, all right, I could let a few of these things go, but you know what? All the way back at the very beginning, when they told me that the monthlies were X and they ended up not being that, I had a bad taste in my mouth and now I'm going to take it out in other ways. That is just what I try to tell people. It's almost like, this sounds like an overgeneralization of it, but I always tell clients, look, confess to brokers, not priests, when it comes time to either selling or buying.
Interesting. So basically, like, start off with the proper information to send the deal off in the right trajectory.
Exactly. Because the last thing you want to do, and sometimes it's by accident, but if you don't have that proper information from the get-go, for some reason, especially with the way that people are expected to act quickly, there may be a level of distrust and simply saying, why did you say that, when in truth, it ended up being this? And that sets a bad tone from the offset. We all want a very nice, boring, plain, vanilla transaction on all of our deals, but that can be avoided by just making sure, again, full transparency and honesty at the very beginning from not only the seller, by the way, but also the buyer.
Got it. So I guess that leads me into, like, the next next question, which kind of is interrelated, which is, what are you seeing as the greatest challenges to get deals done on the legal side?
Absolutely. So to kind of go back to the theme of, like, we want speed, but we don't want to lose quality. One of the biggest challenges that I and a lot of other attorneys is simply that although we've kind of rounded the corner and kind of pulled ourselves out of the COVID world here, while we are still having some remote closings, we're seeing more in-person closings and things along that nature. But one kind of caveat there and one kind of corner of the transactional world that kind of hasn't kind of gotten all the way there yet are the management companies. All right. During COVID, some of these management companies let go of people. Some of these management companies switched to either fully remote or a hybrid remote. So what you're now dealing with is a little bit of a logjam and a little bit of a slowdown during the most crucial transaction for a buyer, and that is the due diligence period. All right. You are asking the management company to answer questionnaires. You're asking them to make the minutes available. You are asking for updated financials. All of those things that pre-COVID were very quick because you had 9 to 5, 5 days a week people in the office, just isn't the case anymore. So I would say if you're looking to get a deal done in, like, let's say, signed in 5 business days, you're going to have to add another 3 to 4 business days to that just because of that one element. That
Yeah,
is
that's time kills deals. You're so right. You're so right. So that's the
absolutely.
biggest. Yeah, you're right.
Yeah.
100%.
So it's important to just kind of know, temper expectations. Hey, we want to get this deal signed before the end of the week, but it's Wednesday, so may not happen that quickly because attorneys can to bang out a contract very quickly. Broker to broker could bang out a deal sheet pretty quickly, but ultimately the person who holds the information that everyone needs, the management company, they may not just simply have the staffing or the urgency to turn things around as quickly as we all expect them to be. So there's a little bit of a give and take on that.
Wonderful. Thank you so much, Stephen. So interesting. In your capable hands, these deals will, find their way from start to finish. So that's great. That's great. You and Val, man, we're like the A team here. This is great. And so nice. Thank you. Thank you. So, I was kind of saving some of the meat and potatoes of the discussion, because, Yuval, we're highest grossing office, in the Douglas Elliman chain of offices, and Yuval is our executive manager of sales. So I love listening to Yuval. I get so intelligent just hearing him speak. So Yuval, I wanted to talk to you a little bit about the market. So, like, for instance, what segments of the market are you seeing are like performing the best?
Yeah, it's in terms of performance, it's kind of. Oh, I'm just getting some feedback. But yeah, the market clearly, contract signs have increased significantly over time. Into the spring season. What's been an offset there is new supply has not been entering into the market at the same pace it did last year. But there is tremendous value in nearly every neighborhood, with a couple of exceptions. If you're trying to buy in Brooklyn, it's a very competitive process. The West Village is extraordinarily competitive. Madison Avenue and over in good new inventory, it's extremely competitive, and you can see the prices are pretty significant. And if you're looking 10 million and above, it's a relatively active market. But with that said, everything else there's tremendous value. I mean, if you're willing to put in a little bit of work, you can buy at prices that the city hasn't seen in some time. But you'd have to put the work. It's the unfinished inventory that has been struggling. So it has created incredible value, but the value doesn't sit around forever. I mean, as we head deeper into the summer, we'll start to see inventory tail off, and it's not being replenished with new inventory. So, the opportunities don't necessarily last forever. There are some negatives in the market with interest rates consistently, at this point, they're probably at the highest rate that they've been in quite some time for a 30-year fixed. And the word is that the Fed may raise again by a quarter point, which is not clearly not positive, but buyers have adjusted. In the condo market, over 60% of the sales are cash. So buyers, have simply adjusted and using the cash purchase as leverage to secure even better pricing. So I
love the word tremendous value. Tremendous value gets the buyers excited,
But you see what's going on. You see the marketplace, and you could see where you could buy apartments at certain price points. I mean, but the caveat there is that you're going to need to do some work in almost every case. The housing stock that is at tremendous value now, for the most part, is going to be inventory that needs improvement.
Right. So this kind of takes me to my next question. So based on the current market report, the median sale price cooled off, 4% year over year. which in Manhattan, it's like it's a great sign for buyers in a market where prices are historically always climbing. So in a market that's cooled off, do you think that the market's bottomed out? Do we still have room for prices to cool off?
Yeah, I think it really depends on what you're looking for. It hasn't cooled off if you're looking for, a unique property in a high price point that's finished in a prime location. You're still paying premiums in those types of markets. Like I said, if you're looking for an apartment that you want to put a little bit of work into, you can buy Park Avenue now in a pre-war for, significant value. If you compare it, on a relative basis to what those properties sold for 10 years ago, 5 years ago. So yeah, it's but the market has its limitations as well, right? A condominium seller is not going to go to zero, right? They'll just rent at some point if they don't have to sell and just wait out a market for interest rates to improve, which some are speculating will over time. I guess we don't all really know, but it would make sense that at some point they would come back if the economy has been, is going to near the point of recession, which some have speculated is close to it. But that's all noise because we won't know until we're already in it, right? So, but in any event, there are limitations to where sellers will go. On the co-ops, we all know that boards often will not approve below a certain price point. So, I don't see how much more room there might be for negotiation, but I do think that if there's a buyer that is serious about buying, especially now, it's sort of, in the middle-ish of summer towards the end, where, the sellers probably will lose interest in selling. They'll come off the market and come back in the fall. Historically, inventory trickles off towards the end of August into the first couple of days of September, and then begins to climb again later into October, with about the peak in October. So right now there might be a seller that's sort of, it's like that carryover supply, the seller that hasn't been able to sell through the spring, and it might just, be getting to the point where I'll either just take it off and take a break, or I'll make a deal now. So if someone is interested, this is an opportune time if they're not traveling to get into the market and try
This is the time. Right. It sounds, it sounds great. No, I mean, that's such a great characterization. I know that's not an easy question to answer, and but it's so true. Everything you said was so true. Thank you.
Yeah, but inventory will come down. I mean, inventory already has begun a little bit earlier to come down. Off-market inventory has increased. It's just, in some cases, the seller just become fatigued and they're not getting their price, and they'll just come off the market and wait it out. And as I said, if you own a condo, rents are so strong, which I think Hal's going to get into. You have an option as a seller of a condo. In a co-op, not necessarily.
Right. Wonderful. Well, it's interesting because, Gabrielle and I, we do a lot of, sales side business, and we do a lot of buy side business. So, taking into consideration, Gabrielle, what, Hal is, Yuval is saying about the market, what would you say buyers should expect in the market now?
Yeah, I mean, you've all touched on a lot of really great points, which I would also impress is that, we are seeing that this is a buyer's market. All the buyers that I'm working with now are, I would call them pretty savvy, because they realize that this is a great opportunity to get in and take advantage of those sellers that do need to sell and they are ready to make deals. And, when hopefully if and when interest rates do come down, a lot of buyers are going to come back into the market. So they're going to be competing if they wait for that opportunity. So what I would say is, buyers, they need to be prepared as much as they would in a stronger market, because the inventory is still very tight. So all of the apartments that are priced well, there's going to be multiple bidders on those properties. I'm seeing left and right my buyers getting interested in properties that have multiple offers on them. So I would say that if you're a buyer right now, even though the market is slower than it was, the properties that are priced well and are offering good value are getting a lot of interest. So you still need to be prepared as a strong buyer. That means, having conversations with your mortgage banker before you start shopping, and, working with a really top real estate agent who knows the market in the area that you're looking in, and also being ready to go with an amazing attorney, because if you do find something that's priced well and that you want to buy, I can guarantee you that it's going to go quickly in this market. So you just want to have all of your your tools sharpened and ready to go.
Also, your banker. You need your banker. You need your pre-approval letter from
Right.
Val, right?
Exactly.
When you make that offer.
Exactly.
Yeah, absolutely. So, I mean, sort of echoing, that aspect of it. If you were to sort of speak a little bit about the rental market, like since we do a fair amount of business with landlords that are leasing out their investment properties, what would you say, based on the current conditions, you would give advice to for like the best advice you would give landlords and tenants?
Yeah, so because interest rates are still high, a lot of people are still priced out of the buying market. So they are, that's keeping the rental market really high right now. So I would say that for our landlords, we're not having any issue renting properties of all different price points, all different sizes. It's not what it was last year, but it's certainly a hot market for rentals still. And that being said, there's renters are still price conscious. So they still have budgets, and they're a little bit more capable in this market to make deals. So I would say if you're a landlord, you still need to be priced well, but you can still get a high price. And then for renters, if you're a renter in this market, again, echoing the buying market, you're going to need to be prepared, because the best properties that are priced well are going to have multiple people looking at them, multiple people putting offers on them. So you want to have all of your paperwork ready for a renter. That includes your bank statements, your photo ID. You're going to need a landlord reference letter. You're going to need employment verification letter. So having all of these things prepared in a package ready to go is really going to give you the advantage point when you do find a rental that you want to move forward with.
Amazing. I love the way you characterize it, because I feel that a landlord's in very capable hands when you're handling them. But I can also tell that the intake of tenants you're getting, clearly some don't have their act together and they're losing out because they're not prepared.
Right.
Wow, very interesting. Well, rentals are such a mystery right now, because the latest Douglas Elliman market report that came out as of June of this year told us that our prices surged 6.2%. Our vacancy rates are below 1%, which is, to me, just unbelievable. I mean, to have a vacancy rate that tight, basically that's relatively no inventory. So, our most exciting rental executive in Douglas Elliman, Hal Gavsey, I'm so excited to talk to you about the predictions for the rental market. How much hotter can the rental market get? I mean, these numbers are unbelievable. Like, marketing time dropped 21 days from the average time that a rental hits the market, which means like it's here, it's gone. Negotiability. I mean, everything just shows that the rental market is so hot. How much hotter can it get, Hal? Oh, hold on. I think we have you on. There we go. Sorry, go ahead. Oh, wait, hold on. We still can't hear you, Hal. 1 second. Can you, let me just see. Hal, are you there?
I'm here.
There you go. All right, perfect. Let's get you.
You trying to quiet me?
No, it's technology.
That's what's happening here. I mean, Gabrielle already took some of my points away. Thanks for having me. So, as far as, if I can just first, I guess I can answer that question as far as prediction for the rental market. I mean, I can touch on also where it is right now. I mean, it's very competitive. The inventory is still tight. I think as we were kind of all discussing with regards to where interest rates are on the sales side, we're definitely, from my seat and from all of my agents, we're seeing a lot more would-be buyers come into the rental market due to, obviously, interest rates, carrying costs, etc. We're also seeing the owner pay concessions lower than where they have been, which is really no surprise, as we're still in the peak of the rental market. But I think, getting to what Gabrielle said before, while the rental market is extremely competitive, it is not as busy as it was a year ago. The number of transactions are definitely down, but the rents are still higher. Listen, that's not to say we're not still in full swing of the peak market. It's just, for agents, it's much more competitive. For landlords with properties, you need to price them competitively. I've definitely seen, and we've seen, renters pushing back on brokerage fees due to the high rents, which is no surprise. I mean, the average one bedroom right now is, it's in the fives, which is just absurd. And that's up almost a little bit less than 10% year over year. So
Unbelievable.
yeah,
Wow.
it's, so when you're asking me how much higher can the rental market go, as I said last year, I think a lot of people were saying, well, we don't think it could go much higher, but yet it continues. And I think it's been fueled by a lot of current tenants continuing to staying put and renewing their leases.
I see.
So that's contributed to the tight inventory.
Mhm.
If they were getting COVID discounts, as a lot of them were being referred to back during 21 and 22, they chose to renew. So there have been a lot of points contributing to the tightness of the market. The housing stability, all of that went on in 2019, still contributing to inventory shortage and the challenges that we're seeing. Where we're going to see the market going, I don't expect many changes over the next, say, 3 months minimum. I think it's going to depend on interest rates and what happens over the next several months on the sales side. But I still think it's going to be extremely challenging for all of us, for renters and for brokers as well.
Mhm.
And it's a tight market, so that's really, I think, just going to continue that tightness.
I feel like you do a lot of business with new developments, like these beautiful new buildings that are being built, and they're all rental apartments that Douglas Elliman handles the entire buildings. And these prices just to me seem, quite high. So, can you speak a little bit about how the new development rental market's moving? Are the prices going up? Are they coming down?
Sure. Listen, the prices, the rents are still, the underwriting are still extremely high. What's happening there on the new development side, you're seeing more of the concessions being offered, especially if we're talking about a new luxury development that has 300 or 400 units. We're going to see landlords offering, obviously owner pay concessions and or free month concessions. Okay, so you can advertise as a net effective. We'll see that go down, but the gross rents are still at these or near these historic highs. The blended numbers could be over $100 a foot.
Wow,
that's not uncommon.
that's amazing. And people are that are applying to these high rents, you're seeing that people actually are able to qualify, because incomes maybe are not keeping up with these high rents.
Right. It's that's definitely a challenge for anyone. And if anyone has, say, any son or daughter looking to rent their first apartment in Manhattan, there are still landlords looking to qualify at anywhere from, say, 40 to 50 times the monthly rent. So you do the numbers, you're talking about out of school earning well over 120,000. So that's not happening, right?
Yeah.
We are seeing more of the guarantors being brought into the equation, and especially the third-party guarantor companies. Those really exploded during COVID, and also after the HSTPA limited landlords or prohibited landlords from collecting anything greater than 1 month's rent and 1 month's security.
Oh, wow.
So what would happen there is, let's just say someone was maybe a foreign exchange student or a new student coming in, but they didn't have employment to qualify. However, they had enough family income to pay, say, 6 months or a year up front to offset the employment shortage. You can no longer do that. So these third-party companies have become very popular, as Gabrielle and most of our agents are aware. So there's just a lot of challenges on the rental side, but it's an interesting time.
For all you viewers, the HSTPA is the Housing Stability and Tenant Protection Act of 2019, which was passed on the state level to protect tenants, in different ways. So, Hal just gave us a really good understanding of how that impacts our markets.
Yeah, and I'm sorry I didn't go through with the name of it, but yes, it's really
No. It's
quite impactful
my
for
acronyms,
both.
because I forget sometimes too. It's great.
Yeah, and it's impactful for both on the renter side and the landlord side. As we briefly discussed, prohibiting any prepaid monies. That's really hurt the rental market in New York City.
Thank you.
Sure, of course.
So Iman, now that we have the data from the Q2 market report, we're just curious to understand how are the conditions of the market compared to what the reports are indicating. What is your personal experience?
Well, first of all, I have to say that this panel discussion, really the theme here, I think, was preparations and deals. It seems like that's really what needs to be done. On the banking side, Valerie, needs all the docs in advance so she can give you everything you need as far as your financing. Stephen needs all the right, information because there are deals out there, and the prices have cooled off to some extent. And well-priced properties are selling very well. It seems like the theme that I felt that the market report was was indicating was that there's been an adjustment because when interest rates go from, let's say, 3% to 6%, how does the market react? So now that we're 12 months in, this last market report kind of gave us the impression that sellers understood after 12 months what is it they had to do to make the deals with the buyers, and that's how we saw transactions happen. So basically negotiability, days on market, all the indicators in our market report kind of showed that there was more congruence, so to speak. That's really, I think, was what we're seeing. Well-priced properties are definitely getting lots of offers and getting sold quickly. Pricing is more important than ever. I think that's the key.
Right. So how are you advising sellers on pricing and timing?
It's interesting because there's a big question of, should I sell now? Like, what if I wait a year? Like, what if I rent my apartment and I put it back on the market next year? And the answer is, based on the Fed policy, it doesn't seem like we're going to be changing that much with the interest rates and whatnot for at least the next 2 to 3 years, I'm guessing. But it's, of course, I guess. But in that regard, it's the market, there's been an uptick. Just as of the latter part of July, we've had accepted offers, contracts going out, properties that were not getting that many showings or attention for the months of May and June, and the early part of July. All of a sudden, they're getting now multiple requests to see it. So it almost feels like we're in kind of an early fall market season where people are kind of hitting the ground running and kind of seeing where the market is as of today and jumping on all the good deals. So it feels like it's the right time to sell now. We don't know what the market's going to look like next year. I don't think there's going to be vastly. What's interesting is if there's something you can do with the money, that if you sell it today versus a year from now, like right now, if you invest in treasuries, you can get 4 to 5%. If you put your money, in a certificate of deposit, sometimes you can get 3%. So the returns are good if you have some place to put your money. So I would say now is probably the best time to sell, especially with this uptick we're seeing in the market. But with that note, I just wanted to thank all of our esteemed speakers. I can't thank you all enough for sharing your sage advice to our audiences. I think this 30 minutes that we've spent together, of course, is not enough. I could spend a lot more time with each one of you and really get into the nitty gritty of it. But I hope all of our viewers enjoyed hearing from all the experts here. Of course, if you have any questions about anything we talked about today, feel free to send us messages through our LinkedIn, our Facebook, our YouTube. We're going to put the links in for everyone's contact information as well. So if you want to contact Valerie directly, Stephen Allen directly, if you need to contact Gabrielle or I, or our team here at Douglas Elliman, which is the best team in town on the brokerage side, please feel to contact us. So thank you all. Thank you. I just wanted to thank you all very much.
Thank you.
Thank you.
All right.
Good seeing everyone.
See you at the next panel. Thank you. Take care. Bye-bye.